Hello and welcome to The Big Picture. In tune with the announcement made in his budget speech by Finance Minister Arun Jaitley, the Union Cabinet has cleared the proposal to raise the foreign direct investment in the insurance sector from present 26% to 49%. The proposal to raise the FDI cap has been pending since 2008, when UPA 1 had made a similar proposal. However, it would not be implemented as the Standing Committee of the Parliament headed then by BJP's Yashwant Sinha had opposed it. Incidentally, the insurance sector was opened for private players in 2000 by then erstwhile NDA government headed by Atal Bihari Vajpayee. Now that the present government has come out with this proposal, it is expected that the Congress will support this move. Meanwhile, what will be the benefits of this move to the insurance sector in particular and the general investment climate in the country, which has been slacking for some years now? How will this increase in FDI affect the public sector insurance companies, and also how will it benefit the common man? We will discuss all this today with Professor Ravi Srivastava, Center for Economic Studies and Planning at the JNU, Vivek Saxena, Secretary General, Confederation of General Insurance Officers Association, Dr. Nishant Jain, Deputy Program Director, GIZ, a German Development Cooperation, Mohan Gurswamy, Senior Economist on the phone line from Hyderabad, and Shubhamoy Bhattacharya, Executive Editor of the Financial Express. Welcome to all of you. Mr. Nishant Jain, I would like to come to you first. Do you think this move by the government to increase the FDI is something which will be welcomed globally, and do you think the kind of investments which we were talking about will be coming in?
I certainly think so, that because this was long overdue. Government was talking since 5-6 years, and I feel that since past so many years this discussion was happening, and when this decision has been taken finally, this should certainly increase the investment, bring new investment. Over time, I feel it should bring more than 50-60,000 crore. But even in short term, I think 20-30,000 crores should certainly come. And this is something which a lot of companies outside were waiting actually to happen in India, because they were thinking that this will happen very soon. However, we have to be cautious seeing the current market situation, the economy downturn and things which are happening. So we should not be too ambitious that, okay, now this decision has been taken, so a lot of money will start flowing very soon.
FIPB, it is through the FIPB route. The first 26% is automatic and then 49% to the FIPB route. Is this something where, which the foreign investors would not mind? And 51% is still with the Indian Indian control.
I think they would have loved to have without FIPB route, like till 26% is there. But even for beyond 26% FIPB route, of course, on one hand, if you see, you can say in certain way that, it impedes on IRDA's decision. IRDA was deciding till now. Now FIPB will decide. But if you see another view, FIPB actually has a much diverse set of people sitting there. So maybe they can take a more wholesome view. But from a company perspective, certainly they would have preferred to have no FIPB route and going there directly. And at the same time, they would have preferred to also get the option to have controlling stake in terms of the board of directors and things like that, which government will not allow now. It has to be Indian controlled. So that is something which I don't think foreign companies are too happy, but this is what it is. So it's much better than what it was earlier.
Take it or leave it kind
of situation. Take it or leave it.
Okay. Mohan, this some kind of a take it or leave it situation, or is it, do you think this is what the foreign investors were expecting, and do you think...
Well, I'll have to take you back a bit for this proposal. It first came to the government in 1998 when I was in the finance ministry. At that time...
You have to speak louder, Mohan.
This proposal first came to the government in 1998.
Yeah.
At that time I was in the finance ministry, so I dealt with the matter.
Right.
And at that time it was felt that foreign insurance companies should come into India, because that is one way of getting foreign insurance funds into India.
Right.
You see, it's not the business they do here which is of interest to us. It is the funds which they can bring to invest into India which is of interest to us.
Right.
So at that time, the government was thinking of giving them majority stakes. And there was a big hue and cry, hullabaloo within the BJP and the RSS and all that. And so as a compromise, this 26% figure was arrived at. But 26% didn't attract very many companies. Even 49%, I don't know how much of an attraction is going to be, because if you want companies to bring from their overseas companies billions and billions of dollars to invest in India, because that's what insurance companies do with their money, is to invest in in businesses and in shareholding and in lending. Then they have to have control of their operations here.
Right.
And that is to build confidence in their overseas principles. The total business they might do in India is very small, because I don't think these people would be able to compete with the reach and the stretch of LIC and national insurance companies and all
The public sector, the public
so
sector.
far they haven't been able to do it either for the last 15 years.
Right.
So why hold on to this 49%? We can condition them, saying that if you're going to deploy funds into India, then you can have even more.
Okay. Ravi Srivastava, how do you look at this? You think that this is a halfway thing which they have done, or you think they should have? You think they could have gone ahead and given?
Well, I have a different take on this. A lot of water has flown under the bridge since the 90s, when the country was seriously looking at full capital convertibility. The East Asian crisis hit the world, including our rates of growth slowed down. Then we had the Argentinian crisis and so on, and then finally, of course, the major economic crisis of 2007 and 8.
Right.
This exposed the entire international scenario to the kind of volatility and risks which exists in financial markets.
Right.
After 2007-8, very little serious reform has taken place in financial markets globally. A number of proposals were mooted globally, but the kind of reforms that were to be undertaken have not been undertaken. The earlier government went ahead to push for insurance sector, FDI, in 2008.
Right.
And the crisis hit us in 2008. That is why these proposals, the kind of risks which are associated with, because insurance sector funds are integrally related, as we know from the 2008 crisis, what has happened to companies around the world globally, to the kind of assets which are created in the financial markets. And that is why the standing committee last year under Yashwant Sinha recommended that we should not go ahead with it. But there has been a large consensus between the BJP and the Congress.
This was in 2011 and now 2014.
Right.
There has been a change in the attitude of the BJP also.
Absolutely. So I personally feel that there is the risks, and this is basically buying one and getting one for free, because the question is really not just of FDI and insurance. As we know, the insurance cap will also apply to pension funds.
Sector, exactly. Yeah.
And that is where the risks which are contingent in greater exposure to international financial markets, without regulation being in place, without our ability to be able to, we survived the crisis, or we did reasonably well in some parts of the crisis because of our regulatory structure.
Absolutely.
So I think it's true that the government has built in some safeguards. They're talking about the composite investment. They have a 49% safeguard. But I think there are risks associated with this, and particularly when you look at pension funds. And this is really not the time to open up, particularly as far as the financial sector is concerned. This is still not the time.
Okay.
This is still not
Nishant
the time.
Jain, would you like to react to that? This is not the time to open up the sector.
I have a different view a bit, because I feel that this has to happen, and I agree with him that, of course, in terms of the money, there could be a way that you can raise the money from domestic market, you can go to the stock market, you can raise some money. But I feel it's not only about money. A lot of technical know-how, a lot of effect on the distribution, because it's not only about the insurance companies which will be coming, the whole distribution channel, the whole TPAs and the brokers and everything. So it will bring a lot of, I think it will bring a lot of investment and technology which will help in expanding the market. Mind you, India has one of the smallest insurance penetration in the world.
About 3.2%.
These arguments would have
the
held
GDP, yes.
if we had not undergone the crisis in 2007. If that world crisis had not hit us, and we had not become aware of the risks and for the kind of which financial assets carry, then I think these arguments would have very considerable validity. But I think post 2007-8, we need to take a more realistic view of the world around us.
Okay, Mr. Saxena, You belong to the Officers Federation, Confederation of the public sector insurance companies. How are you people looking at this proposal?
See, FDI, in our view, it should not have been opened up.
You are saying even 26% should not have been opened up.
49% it should not have been done. But now it has been cleared. Government has cleared it. Although same BJP, Mr. Yashwant Sinha had opposed about a year back. We were watching that situation. But immediately on forming a government with clear majority, they have gone ahead. So there is no point discussing whether it should be done or not. But the take from our side as a workforce of the public sector insurance company, not from the angle of survival of the employees, but for the survival of the public sector general insurance companies.
You think this proposal is going to affect
definitely
the public sector insurance companies? Right now, LIC has something like 70% control, share of the market, and it's going to be seriously affected.
Yeah. See, in general insurance, LIC is having around 70% market, GIC is having 60%, slightly less than 60%. See, we are having a risk capability which private sector don't have today. So those risks are underwritten by general insurance public sector companies. But the problem is that we have been fighting among ourselves. I'll take you slightly back. 91, this opening up of insurance sector was declared by Dr. Manmohan Singh in that 91 budget.
Right.
And 94, there was a committee, Malhotra committee report was there on insurance sector opening up. And they had clearly recommended that these 4 companies should be strengthened before these are opened to the private sector. But I am very sorry to say that nothing has happened in this
From
direction.
94 to 2000, when it was opened, you say that there was no efforts made to strengthen these public sector insurance companies.
And even after opening up, nothing has happened in the public sector insurance companies. In fact, there was a time when this was a matter of discussion that these 4 companies should be merged together to form a mega corporation like LIC. And I remember in 90s, immediately after the Malhotra committee report, there was another committee which was headed by Mrs. Sushma Swaraj, and she had recommended that these 4 companies should be merged before opening up the private insurance to private sector.
The Parliament.
Yeah, but it is not done till date. And we are losing around, by a rough estimate, more than 6,000 crores of rupees every year because of the infighting among the 4 companies.
Among the 4 companies.
We are giving even 100% discount. Can you imagine any industry, any trade can happen with 100% of discounts. So that is, and the 4 companies, they are just keeping their flag up and they are not bothered about the insurance sector as a whole.
Okay, that's interesting. Mohan? Mohan?
I think we're missing the point here completely.
Yes.
The point is, how do you need for your expansion, for the capital investment plans which are on the anvil, you need huge amounts of foreign funds.
Right.
That foreign funds doesn't come through equity, which these insurance companies are going to invest. It is the funds they manage abroad, which can be then brought into the Indian market. And there is no risk on that. The exposure is theirs. It is not us. And insurance funds are the only funds which have a long-term funds. For infrastructure projects, you need funds which can stay in a project for 30, 40 years. And insurance funds are the only long-term funds you have. Because when a person takes an insurance, he takes it for a lifetime. So, what happens is that they have long-term funds. This capability of investing for a long time is what interests us. And how do you get foreign insurance funds into India, not foreign insurance companies? That is not so important because the equity capital they're going to bring is not going to be much. But it's the funds which they will employ, which their companies have there, which they will invest in India, which is what is of interest to us.
Mohan, the question we were discussing, what Vivek Saxena was talking about is the impact this will have on the public sector insurance companies.
And general insurance plus one monopoly on LIC, so that business can go on as usual. Just like, Air India had resisted for a long time to have a monopoly on aviation. How long will this go on? It's the people who pay, the economy which pays,
Mohan, one second.
We have
please.
the highest actuarial rates in the world now.
Mohan, please listen to my question. My question is what Saxena says, that there are these 4 insurance companies, you know, they were supposed to be merged. There was a proposal which was put on board even in the 90s by a committee headed by Sushma Swaraj, a parliamentary committee. Why is it that, you know, successive governments have ignored it? Why can't the public sector insurance companies be strengthened? Because even now it is said that some of the, you know, major funds of these public sector insurance companies are going into the infrastructure projects which the government, where the government needs a lot of funds. So can the private companies who are coming in, the foreign companies who come in, will they be interested in funding the infrastructure projects which you are talking about?
No, Girish, again you have not understood it. You have not understood the proposition. It is not the funds which the insurance companies will manage here, but it's the funds they manage abroad, which are of interest to us and which will benefit the economy. The funds which are here can go through Indian companies or any other companies, they will still be finite. What you need is the huge pension funds, the huge insurance funds which are deployed in foreign markets to bring them into India. How do you bring them? You create an element of confidence saying that you have your own institutions looking and evaluating projects and then make investments on that basis. That is what you try to create here.
Mohan, you are not addressing the issue of the public sector company and the effect on them.
I am not interested in addressing the issues of public sectors, you know, whether there is one company or 2 companies. I think a monopoly owned by the government is not good.
It's not
if
good.
You have 4 companies,
okay, that is your
one company.
So you think that
4 general insurance companies compete with each other.
Okay.
So because Sushma Swaraj said it doesn't make it a holy cow.
No, it doesn't. But incidentally, they are in the government now. That's why that's the only reason why I raised that issue. Anyway, Shubhmoy, how would you look at this? How will it affect the public sector insurance companies? What Vivek Saxena was talking about. I don't know whether you heard about it. Vivek Saxena is from the Officers Association of the Public Sector Insurance Companies. He says that the successive governments have not strengthened the public sector companies. Now, by allowing this 49% investment, it is going to have a huge impact on these public sector companies.
Not really, Girish, because this is something that has been flagged every time there's been a question of reworking the insurance sector. Let's put it this way. The presence of competition didn't particularly affect LIC. LIC's problem lies elsewhere. Similarly, if you look at the public sector, the general insurance companies, their problems lie in terms of the bad underwriting policies that they've been doing. Motor insurance, sure, there's a problem there, but there have been several problems that has been self-created. But this is, but what we are talking about today is the FDI that is coming into the insurance sector, and the cap for which has been raised from 26% to 49%.
Right.
Once the parliament approves it.
Right.
And that will mean that a company which is listed or not listed, whichever way, in India can take a foreign partner's capital up to 49%.
Right.
So that capital allows this company to basically expand its operations to serve, because insurance is a sector where there is a huge solvency requirement.
Right.
The capital that is required per unit of insurance is huge. And this requires huge capital. Because of this huge capital deployment, you need companies with big purses. Indian companies, lots of them, especially the smaller ones, have been saying that they wanted to get a foreign partner's larger capital.
Shubhmoy, my question, 2 questions. One is that do you expect the kind of investments which people are expecting, about 40,000 crores in the next 5 years? Some people are even talking of 60,000 crores in the next 5 years, and you think that the foreign investors would be interested because we are only giving them 49%, no control over it, and the up to 49, from 26 to 49% to the FIPB route. Do you think that these could be some of the stumbling blocks, or you think that the foreign investors will be happy with this?
Girish, good point. The 49% is something that is definitely going to come up for review. I'm quite sure about that. because companies which come in and deploy large capital will definitely be asking for a larger share in management.
Right.
So yes, that will be something that is already being talked about. When I've been talking to insurance companies abroad, they've been saying that this is something they would have wanted a larger share. But in the current context, they are happy to be with the 49%. So yes, I do think there will be larger investment coming in from abroad. This would be in the capital of the insurance companies. I heard a discussion earlier saying that whether there be foreign pension or insurance companies coming into the stock market. This is not the same thing. That is a question of deployment of capital by those companies into Indian stock markets, and that's a different question altogether compared, I mean, which is not germane to the FDI insurance here being discussed.
Okay. Ravi Srivastava?
Yeah.
How, 2-3 things which Mr. Saxena pointed out, and now what both Shubhmoy and Mohan says.
Well, you see, firstly, let me just clarify that we seem to be discussing 3 different things. One, as Shubhmoy has rightly pointed out, the question of pension funds and insurance funds being invested either as equity or as portfolio investment is a separate issue in other sectors. We are talking about FDI in the insurance sector. The question again of expansion of the insurance sector to whatever 60,000 crores and all that, the thing is that the insurance sector, the insurance funds are basically subscriber funds.
Right.
Okay, so the question is that what you need is, to expand branches, and that's just the kind of funds you need. The basic funds, it's not like manufacturing where you need plant machinery, that kind of investment is not required in the sector. So that we are looking at FDI precisely into that, for that purpose, and you have to make a distinction between that and the funds which will be created through larger subscriber base. The advantage may be that the risks get, diffused over a much wider subscriber base internationally if there are global companies. But the disadvantage is that there is a contagion risk if those insurance company or those funds, they can carry the contagion if they, for example, underwrite derivatives which are riskier, if their own balance sheets are contaminated, they carry the risk to us, to the insurance, the subscriber base here, to the pensioners here, and so on and so forth. And this is something which we have to talk about post 2008. There's no point in imagining that we are still living in a pre-2008 world. Right. That's number one. Number two, as far as the question or issues raised by Mr. Saxena is concerned, I completely agree with Mohan. We need more competition. There is why should we have a monopoly? The idea was actually of creating 4 general insurance companies was also basically that they should compete among themselves.
Absolutely.
So I think that the world over monopolies have been broken up, to create more competitive, because you do need a more competitive environment. But to have more competition, you also need to have a level playing field.
Right.
And his other argument that in order to create a level playing field, pre-entry, some things needed to be done. Even now we see
for the public sector companies.
Yes, and we have seen what happens now. Even in the post-crisis period and continuously, governments are making a draft on the resources of the insurance company. They're telling them where to put, what to put. They're telling their directors on the boards what to do. So basically, there are a number of ways in which this level field doesn't exist. And I think that is an important issue. I don't think we should, opening it up to private players should not be an issue. But the contagion, or basically looking at, thinking in terms of financial, basically it's financial sector liberalization. At this, in this particular period, when international reforms haven't deepened, I think this is certainly something which we need to think about.
I think you made important point. Let me get Mohan. Mohan, how do you react to what Ravi Srivastava says?
Well, I think
creating level playing fields.
The whole discussion is missing the point. The equity capital and all these guys are going to bring is not going to be big. It is their principal companies which handle huge amounts of funds. We have to get those funds into our infrastructure business, which need long-term funds. Funds which can stay in a project for 20, 30, 40 years. So, that money, how do you create confidence to bring that money in? You create it by having subsidiary institutions here. You don't bring all the contagion with it because, the exposure is theirs. If they deploy 20,000 crores in an infrastructure project into a highway between Delhi and Bombay, the risk is theirs.
So you think that there will be no risk
of contagion and all coming through, creeping into, like AIDS or syphilis? I don't see that happening there.
So you don't think that
which is exposed. So how do you bring this money in?
So you
how
don't
do you
think
pay for India's infrastructure growth?
So you don't think there are risks involved in this? And
no, I don't think. I think it's exaggerated.
You don't think so?
I don't think so.
Okay. Jane, how do you look at this? You think that the investors are looking at this? Would they be bringing in that kind of huge amounts of money here? Because according to Mohan, we don't have any risk. Will they be taking that kind of risks?
See,
and what Srivastava talks about, level playing fields and things like that?
I think, as Ravi said, there are 2-3 separate things we are talking here. One is that how much fund will come in terms of for the capital investments of these companies and all. And that is something I feel is very important, because if you want to broaden your insurance base...
Is that the most important thing according to you?
Not only the most important thing. See, one is that let them bring the money which will help the companies right now to expand the base, because in India the insurance base is very small. Life is some 3% of the GDP and general is less than 1% of the GDP. So it will, of course, it will bring them to expand the base, for which also you need money, for which also you need maybe global best practices which could be used here. But the issue of contagion, where we are talking about that the Indian market will be much more exposed to the risk from outside, I personally feel is a little bit overrated. I think Indian market should be able to survive, because the way we are trying to put these safeguards, for example, say we say the Indian entity will control it, and also we are saying that the risk will, the FIPB route which will be used. So I feel that we are not putting so much at risk the Indian market when we are opening the sector. But certainly I will feel that this issue of 49% will be debated, because the companies will not be satisfied.
Will not be satisfied. Very quickly, Saxena, very quick last words to you.
This, as Dr. Srivastava said, for expansion you don't require the funds. See, penetration level is very low, even after 12 years of opening of the private sector. Right. It will still remain low even if you make it 74%. Because private companies, they are not going to rural markets.
Absolutely.
See, last 2 years, we have opened 1,000 offices in one company, and total 5,000 offices in the name of financial inclusion, where we are getting a premium of hardly 10,000 or 15,000 rupees, and we are incurring more than a lakh of rupees.
Which we can't expect the private
private companies will never do. And one more thing I would like to add, he has said very clearly, there is no level playing field. What we are asking, only a level playing field. Okay. We are not afraid of any competition, but making, since the 4 companies are owned by the government only, why not you make it a profitable one?
Absolutely.
This part I agree with you.
I think on that note we need to end. This debate is very interesting debate. Level playing field, will the level playing field be created along with allowing the foreign investors to come in? We'll have to wait and watch. But this is a very interesting debate, which I'm sure there will be much more before the government brings the bill to the Parliament and gets it passed maybe next week. We'll wait and watch what will happen. Thanks to all my guests, Mohan Guruswamy, Shubhamoy Bhattacharya, Ravi Srivastava, Vivek Saxena and Nishant Jain. Please keep watching. We'll come back with another issue, The Big Picture, same time on Monday. Meanwhile, have a great weekend.